Good morning. Welcome to MasterTrader, where you could learn to use simple market and stock analysis to make money investing and trading. I'm Greg Capper. Let's see where this markets are at today. Question for you. Is the market pulling down Bitcoin, or is Bitcoin dragging down this market? Which one is it? Here's a futures chart of Bitcoin right here, and it's diving again, down another almost 11%, pushing under 8,000 this time. It's not a bottoming tail. It's still early in the day, but here's an intraday chart, and it doesn't have that much volume in it yet. That's why there's a lot of little dots here, and this is a 30-minute chart. But this looks like it's going lower. As I talked about last week, 6,000 I think is a good target area, and there is the possibility that it could go down to 4,000, where it started to move from last November. So that's something we're keeping an eye on. The broader markets right now are down. The Dow is down about 170 points, the Dow futures. And we made our subscribers aware over the weekend that's green line, which is a 50-day moving average, is widely followed by institutions, and there were bids down there early this morning on the dip. Now the 30-minute chart is still in a downtrend. Notice this little consolidation right here. It couldn't bounce into what I call the void. And then it dropped again. So now the question becomes for us as day traders, was this a little peekaboo move to a new low, and that sets the low for a short term, which gets prices moving back up again? So our resistance area is close by here. But if it can wiggle around here, I think we're going to have a play on the long side looking for a bounce. Further out, I think it has to do some work in this area. This is what I would personally like to see for getting long into this area of major support here, somewhere between the 50 MA and this major support, to have some type of bottoming action here. And then we could possibly be moving back up again. So we'll be watching for that in the coming days. The NASDAQ is showing some relative strength, but in the same way, I would like to see it get down possibly to this minor support area and the 50 MA as well. Down here, we would get interested from an intermediate term point of view. Few other things to look at. Let's look at the S&Ps before we go there. There we go. There's the S&Ps. There's our breakout bar failure that started this move. And have a similar pattern here as to YM. We often do. And so right down here, we got a relatively wide area. But, we just don't know. It doesn't make sense to look for pinpoint areas where prices have to turn, where you look for a specific number. Look at an area and just watch how the candles come down, and look for it just simply go from red to green and begin to stabilize there. And the ideal scenario is for it to stabilize over at least a couple of days and sometimes a week. If you're an intraday trader, that could be 5 or 6 bars. So, all right, let me show you a few other things that can help you. And subscribe to the channel. Click the button and subscribe. Get updates. And pretty soon, Dan and I will be doing this live in the morning, talking to you and taking some of your questions. So here is another market internal gauge that you should keep an eye on. So this is the put-call ratio. This is how many puts versus calls are being traded by traders, retail, whoever they are, hedge funds. And the pink line is just the day-to-day of what they're doing at the close, and the blue line is a moving average of it. And what we want to see is it come down here where they're becoming overly bearish. Of course, the market goes down. They start betting it's going to go down. And when it gets down here, the odds increase dramatically that the market goes up. Same thing when it was up here. When it went up here, we knew that pretty soon the market was going to start to pull back. Now, it's not something that says it's going to happen today or in this minute. It just gives you a heads-up warning, which is great. And you can see over here, this chart on the top is called a volatility index. And the last time it shot up into this area around 22-ish, and the option traders were betting on the market continuing to tank, which was right around the presidential election, it started a huge advance. So this is something we're going to be keeping an eye on. What you have to do is set an alert on your system up here in this area, and then see what the markets are doing at the time. By the way, we'll be doing a webinar on Thursday at 4:15. I'll post the link. Come and join us, and you're going to learn a tremendous amount about crash-type markets and how to trade volatility. So, good trading, everyone. Well, before we go, let me share one last chart with you of bonds, because the big talk was that interest rates are going higher, and that's what scared the market. Well, get used to it. They're going higher. And here's the bond futures. This is a chart I shared with our subscribers over the weekend. And here's an initial move down, and you recognize this as a head and shoulders top. You all recognize that. And there's the break of the trend line, which happened. And now, this distance, if we project it lower, and it almost always lines up with price support, comes down here. So this is where our downside target is for bonds, which means interest rates are going to be going significantly higher, and that's a good thing at this point in the market. And we can speak about that on one of our upcoming webinars or talk shows that we'll be doing. So stay tuned, subscribe to the channel, and get all the MasterTrader updates. Good trading, everyone.